Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from our Lagos studios. I'm Chimeze Obi Iwago. On the program today, Libyan officials look to foreign currency fees to tackle exchange rate. Morocco and Nigeria agree on next steps for offshore-onshore gas pipeline. Plus, South Africa's Vodacom to increase black ownership. Let's get the show started off now with the markets. And here on the African continent, the Nigerian stock market started off the new week on a positive note, trading 0.13% higher at intraday. The JSE index was also up at intraday 0.09%, but Egypt faltered. The index dropped 1.32%. Kenya closed down 0.20% on Friday. And in the Middle East, the markets are mixed, with Dubai financial market outperforming. At intraday, the index was up 1.41%. Abu Dhabi was up 0.89%. Looking at others, Qatar came down 0.23%, while Saudi was down 0.59%. And we're moving now to the U.S., where the stock index futures ticked higher ahead of Monday's open as investors turned their attention to Singapore, where the leaders of North Korea and the U.S. are scheduled to meet. Around 5:40 a.m. Eastern Time, Dow futures rose 50 points, indicating a positive open of 45.47 points. The Nasdaq and the S&P 500 futures indicated a relatively flat start to the session for their respective markets. The moves in pre-market trade come as markets around the world remain on tenterhooks ahead of a key political meeting between the U.S. and Asian leaders. While politics is expected to be the main topic of discussion today, investors will be looking ahead to a meeting of the U.S. Federal Reserve due to take place across Tuesday and Wednesday. The U.S. Central Bank is expected to announce a quarter-point increase in interest rates. On earnings, Dave & Buster's and RH are scheduled to release earnings on Monday. No major economic data, however, is due. And in Asia, most markets there were mostly closed higher today, shrugging off the cautious mood seen earlier as investors focused on a mix of trade tensions and a landmark meeting between U.S. President Donald Trump and North Korean leader Kim Jong-un. Japan's Nikkei 225 turned more positive through the session, with the index closing higher by 0.48% at 22,804.04 points amid broad gains. Elsewhere, South Korea's benchmark Kospi rose 0.76% to 2,470.15 points, outperforming other regional markets as manufacturing names advanced. Hong Kong's Hang Seng Index added 0.43%, but mainland stocks were downbeat. The Shanghai Composite slipped 0.48% to end at 3,052.36, but was off its intraday low. And back here in Africa, economy officials in the Libyan capital, Tripoli, have agreed to a three-track reform process, including a proposal to impose fees on foreign currency transactions. The central bank gave no details of how the fees would work, but it would be aimed at tackling the wide gap between the official exchange rate of 1.4 dinars to the dollar and the parallel rate of around 7 dinars. The gap is seen as a major factor in distorting Libya's oil-dependent economy, contributing to a liquidity crisis and causing corruption, as those with access to dollars at the official rate make huge profits through import scams. Libya was once one of the wealthiest countries in the region, but its economy has been crippled by conflict and political division over the past 5 years. And Morocco and Nigeria have signed a joint declaration in Rabat laying out the next steps for the completion of a gas pipeline deal that will be built onshore and offshore. The two countries agreed to the pipeline in December 2016 and launched feasibility studies, ending with a plan to build the pipeline onshore and offshore. As a next step, Morocco and Nigeria will launch a front-end engineering design to involve countries that will be crossed by the pipeline in the economic community of West African states and to determine the amount of gas available for export to European off-takers. This phase also provides assessing the financial cost and seeking funding from development banks. The declaration was signed at a ceremony chaired by King Mohammed VI and visiting Nigerian President Muhammadu Buhari. Regulations to implement Congo's new mining code have been signed into law with no changes, despite objections from mining firms that have been threatening legal action. The Prime Minister's legal counsel, Anita Lombard, confirmed that none of the changes being demanded by the mining industry had been made. Mines Minister Martin Kabewelu had said that no concessions will be made to the mining industry, which has demanded that key provisions be amended. Congo is Africa's top copper producer and the world's leading miner of cobalt, an element which has seen a surge in demand to make batteries for electric cars. Enacting the code is likely to trigger a legal battle between Congo and major mining companies, including Glencore and Randgold. The miner says the tax hikes and the removal of exemptions for pre-existing operations are a breach of their agreement with the government. And Botswana has scrapped talks to sell a power station plagued by technical problems to a state-owned Chinese company linked to the plant's builder. The 600 megawatts coal-fired Moropole B plant, which was commissioned in 2012 and built by China National Electric Equipment Corporation CNEEC at a cost of $970 million, has often broken down, leading to a reliance on diesel generators and imports from South Africa. Botswana has been in exclusive negotiations since November 2016 to sell the plant to state-owned China Machinery Engineering Corporation, which is related to CNEEC. The African country's Public Procurement and Asset Disposal Board said it had approved a request from the Ministry of Energy to cancel the sale tender. Power generation at Moropole B has improved in the last year due to remedial works, and it currently operates at about 81% capacity, helping the power utility reduce imports. Botswana has a maximum electricity demand of 520 megawatts, which is seen rising by 65% in the next 7 years to 856 megawatts by 2025. South Africa's Vodacom Group says it will increase the stake held by black shareholders by up to 6.25% in a 17.5 billion rand black empowerment transaction. Vodacom says current black shareholders in Vodacom South Africa and a newly formed staff scheme will exchange their current shareholding for a stake of between 5.8% and 6.25% in Vodacom Group. A new empowerment structure called Yeboyethu would acquire a 6.25% shareholding in Vodacom Group based on an illustrative price of 152.50 rand per Vodacom Group share. The new deal will replace an existing scheme that is due to unwind in October and will increase Vodacom Group's black ownership to 20%. On the black economic empowerment rules, South African companies are encouraged to meet quotas on black ownership, employment and procurement as part of a drive to reverse decades of exclusion under apartheid. Still in South Africa, the South African Airways catering arm plans to lay off 118 workers as the struggling airline implements a turnaround strategy to restore profitability. The National Union of Metal Workers of South Africa says it had received notice of the layoffs from the catering arm called Air Chefs and said it would oppose the planned job cuts. NUMSA said it was engaging with SAA Chief Executive Vuyani Jarana on the planned job cuts, and consultations are expected to take place on Friday. South African Airways mapped out a turnaround strategy in March to make the struggling airline more competitive and cost-efficient after reporting a hefty annual loss. SAA, which has not generated a profit since 2011, survives on state guarantees and is regularly cited by credit ratings agency as a drain on the government purse. The international observers are perceiving Nigeria's promise of a pickup in growth, investment and jobs ahead of next year's election as trickish. This follows a political stalemate over its record 9.1 trillion naira budget between the executives and parliament. Investment service provider Bloomberg notes that government's forecast of a 3.5% economic expansion this year is partly premised on the yet-to-be-signed accord, which aims to increase spending on infrastructure. Budgets under President Muhammadu Buhari's first democratic term have been delayed for months, and this is the worst hold-up yet. It's not certain if President Buhari will accept changes made by the National Assembly to the original budget proposal, culminating in further delays. And Bitcoin tumbled 10% to its lowest in 2 months yesterday after a relatively small South Korean exchange reported a hack over the weekend. Crypto exchange CoinRail tweeted that it was hacked and noted that lesser-known cryptocurrencies such as PundiX were among those affected. Bitcoin hit a low of 6,647.33 and at its lowest since April the 9th, coinciding with a broader crypto sell-off. The largest cryptocurrency by market capitalization remains about 50% lower for the year so far. And the Nigeria Sovereign Investment Authority is restructuring its portfolio to focus more on domestic investments after a drop in the currency wiped out foreign exchange gains last year. The institution, which last year had 80% of assets under management denomination in dollars, saw valuations decline after central bank introduced policies that weakened the naira by at least 15% against the greenback. Measures like a market price determined trading window for investors and exporters were aimed at improving supply of dollars at a time revenue from oil, the nation's biggest export, had fallen and caused the economy to contract by 1.6% in 2016. Profit at the fund slid 82% last year to 22.6 billion naira. As foreign exchange gains plunged 98%, they made up more than half of 2016's profit. And to the global oil market, prices slipped today, pulled down by rising Russian production and the highest U.S. drilling activity in more than 3 years, but supported by concerns over future Iranian and Venezuelan output. Analysts expect higher U.S. output to offset supply curbs by the Organization of the Petroleum Exporting Countries, which have been in place for 18 months and have pushed up prices significantly over the last year. Benchmark Brent crude was down 15 cents at $76.31 a barrel. U.S. light crude was 10 cents lower at $65.64. Data from energy services firm Baker Hughes shows the number of new rigs drilling for oil in the United States rose by 1 last week to 862, its highest since March 2015. That implies U.S. crude output, already at a record high of 10.8 million barrels per day, will climb further. We'll take a break and we'll be back in a moment. Do stay with us.